Alright guys, in this video I'm going to run through 4 things. 1, how cryptocurrencies like Bitcoin are taxed. 2, how you actually go about filing your cryptocurrency taxes. 3, why this can be such a challenging thing for traders and cryptocurrency investors to do. And then lastly, I'm going to run through how CryptoTax software tools can actually automate the entire process. So how is cryptocurrency taxed? So in most countries, including the United States, cryptocurrencies like Bitcoin, Ethereum, and others are treated as property for tax purposes, not as currency. So in this sense, investing in cryptocurrencies looks a lot like trading or investing in stocks, another form of property for tax purposes. Alright, so cryptocurrency is property, not currency. What does that mean? So just like other forms of property, stocks, bonds, real estate, you incur capital gains and capital losses whenever you dispose of that property. Let's go through an example. Let's say I buy 1 Bitcoin for $10,000, and 2 months later that investment appreciates to $12,000. The value of 1 Bitcoin has gone up, and I sell that Bitcoin for $12,000. Well, now I have incurred a $2,000 capital gain, of which I will owe a percentage of that gain to the government. So what percentage then do I owe on my gain? Well, that depends. It depends if it's a short-term or a long-term gain. Short-term capital gains occur when you've held your investment for less than 1 year's time. If that's the case, you're simply taxed at your marginal tax bracket. And as you can see below, let's say I made $50,000 last year, then my marginal tax bracket, if I'm single filing separately, is 22%. So I'll pay 22%, that's the same tax rate that I'll pay on my capital gain of $2,000. Well, let's say I held that Bitcoin for longer than 1 year. Well, then I'm taxed at the long-term capital gains rate, which you can see below, and those again differ based on the amount of income that I make every year. So that's the basis of capital gains and capital losses, but it's important to understand, well, what triggers one of these capital gains or capital loss? And to understand that, you need to understand what a taxable event is. So a taxable event simply triggers a capital gain or a capital loss reporting requirement. In our first example, when I sold my Bitcoin for $12,000, that's a taxable event and it triggered my $2,000 capital gain. So whenever you trigger a taxable event, you trigger a tax reporting requirement. So what are the various taxable events in the world of cryptocurrency? Well, the IRS lays this out in their 2014 guidance, and they're as follows. Number 1, selling cryptocurrency is a taxable event. Number 2, trading one cryptocurrency for another is a taxable event. And number 3, using cryptocurrency to buy goods or services is a taxable event. Okay, so those are the taxable events, but what is not a taxable event? 1, just buying and holding cryptocurrencies like Bitcoin is not a taxable event. You don't realize your gain or loss in the asset until you dispose of it, right? Until you sell it, until you trade it for another cryptocurrency, or until you use it to buy goods or services. Number 2, sending cryptocurrency from one wallet address to another or from one exchange to another is not a taxable event, right? Me simply sending my Bitcoin that I have in my cold wallet storage into my Coinbase account so that I can go trade, that transfer is not a taxable event. Now that's how cryptocurrency is taxed in general, and that's how capital gains and capital losses work at a high level. Now if you mine cryptocurrency, that's actually receiving a form of income, and it's taxed a little bit differently. We're not going to get to it in this video for time's sake, but I'm going to link some information in the bottom in the video description that's going to walk through cryptocurrency mining and how those types of taxes work. So now we know in general how cryptocurrency is taxed. But how do I actually file my cryptocurrency transactions with my tax return? So to do that, you need to fill out IRS Form 8949, which is the same form you use to report the capital gains and losses of all types of property, cryptocurrency included. So to show how you fill out this form, we're going to run through an example. Let's say I buy 0.1 Bitcoin on Coinbase for $100. I then take that Bitcoin and send it over to Binance, my preferred exchange, where I trade it for 0.5 Ethereum, which I send that Ethereum, all 0.5 of it, back to Coinbase and cash out to fiat currency for $200. What does that look like reported on Form 8949? So remember, step one, I bought 0.1 Bitcoin on Coinbase for $100. Again, I haven't incurred a taxable event yet, I've simply bought it, so nothing gets filled out right now. I then send all of that 0.1 Bitcoin over to Binance, still haven't incurred a taxable event, still don't have a reporting requirement on 8949. But remember, in the third step, then I trade all 0.1 of that Bitcoin for 0.5 Ethereum. As we discussed, this does trigger a taxable event, and you can see below, in column A, we'll put that 0.1 Bitcoin, the date that I acquired it, the date that I sold it, my proceeds, my cost basis, and then the gain or loss. So real quick, my cost basis was that $100 that I originally purchased the Bitcoin for. My proceeds are going to be the value of that 0.1 Bitcoin when I traded it for 0.5 Ethereum, which in this case we're going to say was $90. And in that instance, that triggers a $10 capital loss, which we put in column H. Moving on to the last piece of our example, I send that 0.5 Ethereum back to Coinbase and sell it for $200 cash. Again, here in column A, we'll put 0.5 Ethereum, the date I acquired it, which was actually the date that I traded my Bitcoin for Ethereum, right? The date that I sold it, my proceeds, right, which were $200 from Coinbase, my cost basis in that Ethereum, which again was $90 because that's how much we traded it for that Bitcoin. And then lastly, in column H, my capital gain, which was $110. To finish filling out the form, you'd simply add these columns together and you result with a total of a $100 capital gain from these transactions. So as you can see, to properly report your cryptocurrency on your taxes, you need to be keeping track of your cost basis, which is how much you acquired your cryptocurrency for in US dollars. You need to keep track of the fair market value when you disposed of it, right? When you incurred a taxable event, if I sold it or traded it for one, you need to know at what US dollar value you traded it for. And then lastly, you need to be keeping track of the gain or loss on that transaction. You'll take all that data and use that to fill out IRS Form 8949. Okay, so you filled out 8949. Now you're going to take that net capital gain or loss and transfer it onto 1040 Schedule D, which is the income section of your tax return. All right, so we've gone through how cryptocurrency is taxed. We've walked through how you report it on your taxes. Now I want to walk through why does this get so challenging. So first, it can be difficult to get the US dollar value of your cryptocurrency transactions. And this is because the majority of cryptocurrency trades, exchanges, are quoted in other cryptocurrencies. But as we saw with filling out 8949, you actually need your cost basis and the sale price to be in US dollar or whatever your fiat currency value is. So tracking down the US dollar value across all of your transactions can be really challenging. So the second thing, cryptocurrency exchanges like Coinbase, Binance, Bittrex, Poloniex don't actually have the ability to provide their users with accurate tax reports. And we hit on this problem in our blog post that we'll link in the video description below at a much more in-detailed level. But because cryptocurrency is so transferable and I can send it from wallet to wallet, anytime I move or send in cryptocurrency into one of my exchanges like Coinbase from a different wallet address, Coinbase loses the ability to give me accurate cost basis information. Essentially, they don't have the ability to give me a tax report that details everything that I need for Form 8949. And this is something here at CryptoTrader.Tax we've dubbed the cryptocurrency tax problem. To illustrate this even further, we could compare it to stock trading, right? If I'm trading on E-Trade, right, and I'm buying Apple stock and selling it and going investing in other places, at the end of the year, E-Trade is required to give me a 1099-B. This form details my cost basis, fair market value, gain or loss across all of my taxable events for trading stocks. And it's this form, the 1099-B, that cryptocurrency exchanges like Binance, Gemini, Coinbase don't actually have the ability to provide their users if the user transferred at any point in time cryptocurrency outside of their own network, which, as I'm sure you know, happens all the time. So the solution to the cryptocurrency tax problem is to aggregate all of your trading, buying, selling, mining, all of your cryptocurrency data into one system or one unit of record, so then you can build your tax reports from there. So this is the solution that CryptoTrader.Tax was actually built to provide. Which brings us to the last step of the video. How can you use CryptoTax software tools to help automate this whole process? So if we jump right into CryptoTrader.Tax, all you have to do is select your exchanges and cryptocurrency platforms. Here we go. Go ahead and import those trades automatically, and the US dollar value will be associated with each one of your transactions. Then simply go and create your tax report for all the years that you've transacted in crypto. As you can see, we'll go and view that now. And you can see every single transaction that you've made now is broken out, tagged with a US dollar value, and you can simply take this report to your accountant. You can download your 8949 to file yourself, or you can even upload your entire report into TurboTax Online for easy tax reporting. And we'll link the video below right here that walks through how to import your report from CryptoTrader.Tax right into TurboTax so that you can easily file your taxes. So to recap, we walked through how cryptocurrency is taxed. We went through how you actually go about filing your cryptocurrency transactions. We walked through the cryptocurrency tax problem and why this presents a unique challenge amongst cryptocurrency enthusiasts. And then lastly, we showed, well, how can cryptocurrency tax software and these tools out there help me and automate this whole thing? So again, I'm David Kemmer. Feel free to leave any questions you have in the comment section below, or even hop on over to CryptoTrader.Tax where you can get started for free and ask me and my team any questions that you have.